Recorded. Yeah, I'm gonna record all this stuff so that people just have it, but I'll start in like 5 minutes. Bro, Dame, how you doing? Can you even type in the chat? Yes, I see you typing, bro. I've been good, man. I've been good. Can you hear me all right? I want to make sure that everything sounds all right. All right, bet. Do y'all have a? I know y'all probably competed this past weekend. Oh, dude, I forgot my charger. I'll go get it and be back in a sec. Bro, Texas Relays is going to be insane. So, I'll see you there because I'm going to watch everybody. It's going to be so cool to just be able to see everybody back at the same place. Bro, it's going to be so lit. Honestly, so pumped. Bro, yes, we got to do something. I'm not sure like what everybody's schedule is going to look like, but like we for sure have to do something. Like Sam's going to be here. I mean, everybody that transferred to I wonder if Georgia's coming. I'm pretty sure Georgia would come, right? Let's see. Oh, they're going to LSU. Dang. That sucks. Yeah, they are going to the Battle of the Bayou. I guess that makes sense. But, I mean, nonetheless, it'll be pretty fun anyways. So, honestly, it might just be me and you. So, I'll kind of get into it. And then I'll do these every single Sunday. And then hopefully more people come in as I post more and do more. But yeah, I'll kind of get into like this week and the news that we have coming out. First, I won't focus on the news for other countries. This is just going to be high impact news. So trading economics, you can find all the news for the upcoming week, and then you can also find past news. So we have JOLTS and job openings. Previously, we were at 6.94 million. Our estimate is that we're going to be less than that. So just new job openings. We have that on Tuesday. And then for Wednesday, we're going to have retail sales month over month. And then we'll have ISM manufacturing PMI. Not super huge. I mean, I'm mostly just worried about Friday and like looking into Friday. This is going to be, I mean, there's really not too much that I feel like is going to happen here on Tuesday. When it comes out, I guess we'll just see like how it does, but we can see how it's been doing over the past year. But yeah, I mean, we had a slowdown in November, December, and then increasing as time goes. I'm just more worried about like unemployment rate and then obviously non-farm payroll. Previously, we had negative 92,000 jobs. So, yeah, we shed 92,000 jobs last month, or in, what was that, February? Yeah. So the consensus and forecast for this month is basically around 50,000, we'll see what happens because I think the last prediction was, what was it last time? Yeah, the estimate last time was like 126,000, and then it came out at like, if I'm looking at this right, yeah, it came out at negative 92,000. So the market dropped significantly that day just because of that. So I'm just curious to see what's going to happen this Friday. That's going to be a big day because obviously unemployment rate and then um, and then non-farm payroll. So that's what we have for like the upcoming week. It's mostly just going to be like looking at what happens this Friday. And then as far as like news from this past week, it's really just been like Trump going back and forth with Iran and kind of everything there, like trying to get the Strait of Hormuz open. And it's just, I mean, honestly, like the pattern is on um, on Friday, Trump will announce something good. Then over the weekend, like everything bad happens, or he says something that's negative, and then on Monday he says something that's good, and it's basically just been back and forth, and like there's really no clear direction of exactly what he's going to be saying. But yeah, I mean, honestly, just like going back and forth and seeing what he does. Because if he comes out and he's like, you know what, I think the war is over, like we're kind of done, we've come to an agreement, then obviously the market's going to go in a positive direction. But I feel like we still have a lot of issues, and like this is hurting our economy a ton, not just the United States, but a lot of other countries. Like the, what is it, I'm trying to figure out what it was. I'm thinking of it. Let's see if I can find it. I literally cannot find it. I can't even think of it. What is it? It's like Japan's government bond has like gone up so high. Um, I literally am blanking on the word for it right now. Yeah, their 30-year bond has gone up, and it's the highest level since 1999, basically. So, I mean, stuff like this isn't just hurting like the United States, it's obviously hurting a lot of other countries. And I think it's Japan that gets a lot of their oil from, they get a lot of oil from coming through the Strait of Hormuz. And I think it's 8 months. If the strait is closed off for 8 months, it will literally cripple their entire economy. And then, like that, it's just a big effect that affects so many people. So I think that the longer that it stays closed, like the higher our chances are of going into like, I don't know how bad it'll be or how much longer like the markets are going to be negative. Like I can't tell the future. Trump could come out tomorrow and then they can start fixing everything and then it could be okay. But I feel like there's just been so much damage that's been done already that it's kind of inevitable that we have it could be a couple red months. Like it could go significantly lower. So I kind of want to open the chart and like just show like some of the stuff I'm looking at. So this is my paper trading account, but if I go look at a chart on SPY, right? Like, if you just look at this, like, we still have so much further that we can go. Like, in all honesty, like, this was literally just the tariffs, right? I think what we have right now with, like, the war and the Strait of Hormuz and a lot of other things, I feel like it can affect our economy a lot more than just, like, you said you're pretty much bearish on every crypto and a ton of stocks at the moment. Like, I am too. Like, I mean, if you just look at this, like, first of all, we were overbought for so long. Like, once we got to, like, right here and I was just looking at it, I was like, we're so overbought. We're literally due for a pullback. Just because, like, just a ton, right? And then, like, we were literally chopping this entire year. So this is the start of the year. This line right here, we had literally been chopping the start of this year, and it had been annoying because, like, we were literally just going through so much chop. But, like, this literally looks like we could just fall off a cliff. We could, like, I mean, I don't know how far it's going to go down. I want to see 600 is what I want to see, and that's about a what drop would that be? That'd be like, if we saw a gap down of about to 600, it'd be about 14%. I think we'll go lower. I really want us to go down like 20% so I can get like really, really good discounts on stuff. I've already slowly started buying in just because I felt like there have been some good deals on certain things. Even though I feel like I could have waited for confirmation. Like, I did get into some things a little bit early. But, like, I feel like there's just so many, like, there's just so much happening right now. We have, like, issues with private credit. I'm going to turn this light on real quick. We have issues with private credit that could be impactful. We have banks that are collapsing in other countries. And just, like, when I hear stuff like that, like, it's always just a huge red flag for, like, just our economy in general. Unemployment's rising. That's not a good thing. The war, not a good thing. Like, I don't want to, like, talk about politics too much, but I feel like a lot of what's been happening lately is Trump is using basically his stage as the president of the United States to basically make a lot of money for himself, right? Like, him posting a tweet saying, hey, we're in good talks with Iran or whomever is obviously going to pump up whatever, like, the entire, like, futures the other day when there were people buying literally 20 minutes before futures market just went up, and Trump was like, you know what, we're in talks. But then Iran comes out and says, no, we're not in talks. Like, stuff like that just isn't good in general because you never know what's going to happen. There's just a lot of uncertainty. And usually for uncertainty, I like trading based off of the VIX and using the VIX as an indicator of, like, uncertainty in the market and just when people are scared. And this is usually when I like getting in, is I like moves like this. Like, this was during COVID. The VIX hit 85, which is just insane levels of uncertainty. I like buying in when the VIX is around 30, and we're at 31 right now. So based on my rules, I started buying in a little bit. I'm not fully allocated just because I am waiting for us to go lower, and I think we can get some really, really good discounts if the VIX does hit 50 or even 60. But, I mean, that's kind of where we are right now. I'm honestly just waiting for us to pull back more. I think we could get to about 550. If we get to 550, that's probably when I'll start, like, really, really allocating in, just because there's going to be so many good deals, especially when it comes to tech and a ton of other sectors that are heavily influenced. But that's kind of like where we are right now. Clearly bearish downtrend, and I think we still have a long way to go. Like, there's just really no signs of reversal at this point. I think we go down quite a bit further. So that being said, you said, what would you say to invest in since the shortage of gas and oil? I think so. I'll tell you what I'm doing. I don't like getting into different energy, oil, gas stocks. That's just not my thing. I like trading bigger companies on a longer time frame just because I can predict the moves better. Because I don't want to go based off of what Trump says or any kind of tweets in general. So if Trump were to come out and say, hey, war's over, like oil's going to come down. And like, I don't want that to happen. I'm not taking that risk. So the things that I am doing is I'm hedging against my positions. So I've taken put positions on SPY as this comes down. And then once I see a support level or a place, like there's a place where it feels like we're going to find some support, that's when I will close those positions out. But right now I have small positions in essentially put options on SPY just to kind of mitigate that downside, like giving me downside protection basically. So I don't have any specific stocks per se, but just it's basically just protective measures because I don't like trading certain things that I can't really predict too much. I really like just trading stuff like this. So SPY is something that I've been looking at. And then like just large companies. So I'll kind of go through, let me see if I can change my setup. Oh, what is this? This is my simulated account. So I have like a ton of different things on here, but all right, let me see if I can get one of my, that's not what I wanted. I swear I created more. Anyways, doesn't matter. Microsoft is one that I've been looking at. I like Microsoft just because, I mean, obviously it's a great company. There's not much I really have to say about it. But I think they're at a really, really good discount right now. They're coming close to this level right here, about 350, which I like it at. I mean, you can tell that there was resistance here, support here, and then we'll see if there's support here. It really just depends on what happens. Like, this could literally get significantly cheaper. Like, it could continue getting cheaper because especially as SPY goes down, like Microsoft, Meta, all the Mag 7 stocks are going to continue getting cheaper. So I don't want to say that this can't get cheaper and this is like a great time to buy. I'd say, to full transparency, I am allocated into Microsoft. I started buying into Microsoft. I've started buying into the Mag 7 companies just because I found them to be good discounts. I feel like we still have room to get cheaper. And if we do get cheaper, I'm going to allocate more as we get cheaper. So I wouldn't say now is a bad time to, because I mean, from its peak, this is oh my gosh, I have to do this. Let me see. From its peak, this move down is about 35%. And I think 35% discount on Microsoft is worth getting into, and that's just me. Obviously, take it with a grain of salt. I can't predict the future, but I think that it's a good discount, especially long term, because I believe in the company long term. And if you were to get into it and it were to go back up to all-time highs, that presents about a 50% return. That's just for holding the shares of Microsoft. If we were looking at Microsoft options, which I'm also in Microsoft options, if we were to look into, why isn't it coming up? Here we go. Yeah, if we're going to look into Microsoft options, I'm usually looking into something that's a couple years out in expiration. I do trade some shorter time frames if I see a good opportunity, but I want to wait for confirmation of reversal and then get into something like this, just because I think the upside is better than the downside, and I'll show you kind of an example. So, if you don't know, for those of you guys who don't know much about options, if you guys watch this in the future, this is the option chain, and these are just the prices of the contracts at this point. These contracts are going to expire in about 2 years. This is like your delta. Essentially, every single dollar that the stock goes up, this is how many dollars, this is how much you're going to make in the actual, by holding this option. So if I hold this, I'll make about $71 for every dollar in the stock price move. So if I were to look at this one, I like buying around 0.7 delta just because it's a little bit safer. If I were to look at this right here, this is about $8,600 just to own this one. And this is the chart for that option. Previously, it was trading at around $23,000, and then right now it's at about $8,600. Just the return on this, if it were to go back up to where it was before, would be around 100 and something percent. That's why for me, the risk versus reward is there, and I'm getting into stuff like this just because there's been a massive pullback, and it can still get cheaper. Like this could go down to $4,000, right? I don't know how much cheaper it's going to get, but for me right now, some of this stuff presents good opportunities for me to get into, and that's why I'm getting into it. So I think, and then as it gets cheaper, I'm going to continue to allocate more. But yeah, I have 2-year expiration on this one, so it'll essentially expire over here. And I think that by then I could at least get a 100% return. And if it hits it sooner, I'm going to cash out. I don't plan on holding for the full 2 years. I plan on selling with at least 1 year left until expiration. So if we can, if Trump could essentially come out and say, hey, no more war, like we're going to make peace. And then if he is, I know that there's like a statistic where like I think it's like the second or third year that a president is in office is typically the worst trading year, but then like the fourth year is the best because they want to get reelected. Something like that, right? I think that this gives enough time for Trump to the war to end, and then us to at least get to a place where we're comfortable. So I think that that's why I'm into this, and I think it just presents a good opportunity long term. The next thing would probably be Meta is at a really good price level just because it's been consistently hammered by like a ton of different things. Like it literally just dropped a ton right here. Bro, appreciate that. But yeah, like it dropped a ton right here. I got into some options contracts right here. I sold them at this peak, and then I hadn't got into them after that. But I'm still not into them. I'm considering getting into options, and then also I buy most of these long-term anyways, so I just dollar cost average into them in like my long-term portfolio. But I think this one could present some good opportunities when it comes to options just because it has come down from its peak. It's come down about 34% as well. And then just upside potential like presents about a 50% return if it were to go back to all-time highs. So I think it's a good price point to buy Meta at. And then you can see that we're very, very close to this previous support range, around $500. So we're sitting around $525. So I think it does present a decent buy opportunity, especially because within like the past, month, it's come down 20%. So I think honestly, this presents a way better risk to reward than some other things right now. I still want to wait because obviously, like I said on SPY, we still have a ways to go in my opinion. I think we can come down and hit that 20%. Who knows what that's going to do to Microsoft and Meta, but those are just some things that I'm watching. Next thing that I'm kind of watching is I like Coinbase. And the reason I like Coinbase is just because like huge upside potential. Like that's all I'm really looking for, is I'm looking for things that have consistently gone up over time and then have that huge upside potential. This isn't something that I would invest in long term. This is something that I have options in, just because the upside potential on this is huge. So we hit highs of 444 about, when was this? In July. And then we have come down to about 161. The upside potential on this, just for the stock itself, is insane. Like 200 something percent if it were to get back to all-time highs. I don't know if it'll do that. I'm not willing to bet that it will get there. I'm mainly just hoping for a small reversal and to get like 50% out of it. And the options contracts on these kind of look like this. So I'm holding 2-year contracts on these just because I want to mitigate my risk as much as possible, and I have the capital to be able to get into some higher price contracts. And for these ones, I'm also buying around 0.7 delta, so this one would be a good example. The open interest on this, I don't like it, but just for explanation purposes, I'll just kind of show this one. Let's see. Yeah, so the chart on this one, it was at about $23,000 at the peak, and right now it's sitting at about 5,300. So that that's essentially like the return on it is so much higher than the risk on it, in my opinion. I feel like it all really depends on crypto legislation, which at the very least is a very active topic right now. Yeah, I mean, this is all super speculative. Like same thing with Hood, and then same thing with Coinbase. Like it's all, those are speculative assets, and I understand this. And mainly, I got into those just because I thought that, they presented really, really good discounts. Like it came down to $3,900 per contract, and then within 30 days, it was up 100%. And these are 2-year out contracts. So I have such a long expiration on these, and I'm also actively selling calls against them too to create passive income. I'm not going to really get into that much, but even if it goes down, I've done the math and I'll at least get 50% of my premium back. So at most, I feel like I would lose maybe $2,500, maybe $2,300. So I think these present a good opportunity to make some pretty quick money if it were to go up. I feel like I could get maybe 100% on these. And then my expiration is so far out that I think it still presents a really, really good opportunity, especially where it's coming from. So if I were to look at, what's the next one that I like, is Hood. Hood is kind of the same way. It's pulled back so much, and I honestly believe in Hood long term, just because, Robinhood, you can do more than just trade crypto, but it follows crypto super heavily just because it has crypto. And obviously crypto's pulled back quite a bit, but from its highs, it is down about, what's this? It's down like 57%. So I think it presents a decent opportunity, especially, in the medium to long term. My thing is, again, like the cheap can always get cheaper. Like this could honestly come all the way back down here. Like it could go to $30. Like I know that. Like there's so much downside potential as well, but I just feel like the upside is so massive because right now it would present just owning shares alone would present about 100% opportunity if it were to go back to all-time highs from October. And then if I have options on these, it would be, so I have 2-year dated options on these, and you can see that the open interest on this is pretty high. So a lot of people are buying these because these are cheaper. So at around $2,200, you get 2-year contracts, and I'll just go with like a strike of $60. Just keep it simple. But if I were to look at what this looked like, These have come down from about $9,000 to about $2,700, and that would basically present. And this isn't even the peak. So I want to see if I can go back to max. No, I can't do that. Okay. Let me see if I can find other ones that were there. I want to see. No. I want to find ones where the peak was in. Probably if I went to like a shorter expiration. If I went to these, they'd for sure have them. So I'll go to. I'll look at these ones. Okay, so this is a good example right here. You can see lows of $550, and then it peaked at about $10,000. So about 1,000% return on these. And these ones expire in about a year out. So I bought 2-year expiration contracts, and right now this one's sitting at about $1,900 per contract. So it's come down significantly. It's like probably 80 something percent. But the upside potential is pretty high. It probably won't get back to this peak just because of theta decay, but I think that these still could offer 100% returns or more. So that's kind of why I'm looking at these, because I think they're a good discount, and I feel like the risk to reward is just significantly better. I'll kind of go through some of the other ones. So those are like the main ones that I've been looking at. If I go to holy sell-off, my gosh. Yeah, a lot of these are just selling off right now. I'm not sure why they sold off so much here. I wonder if they had earnings that day. Yeah, they had earnings. So as you can tell, there's a lot of things that are presenting some pretty good discounts, like that could be a support. Who knows? There was a support here, it came back up, and then it could obviously get cheaper. There's a lot of different, everything. There's just so many good discounts. I still think we have a long way to go before we really hit the bottom. So that's why I'm still a little bit cash right now, and I'm still skeptical just because I feel like we could go lower. But overall, we've made some pretty significant pullbacks on a lot of the major companies. That's not what I wanted. Yeah, so about 15% pullback on Apple. I feel like some of the Mag 7 or some of the bigger companies have pulled back significantly more. Like Apple hasn't pulled back as much as Microsoft and Meta have. So overall, I just feel like there's a lot of good deals right now, but we still can get cheaper just because of everything that's going on. And kind of going into the week, I'm like looking at what's going to happen this Friday, and then also what Trump says on Monday. Because I feel like on basically tomorrow, something's going to come out. He's going to say something. We'll see how it drives the market. And I also want to see how the market opens after this past weekend. So that's going to be kind of interesting to see. I think we're still bearish and honestly have a lot of downside. So kind of just looking at things like that throughout the week. I will be posting on TikTok and Instagram, and I'll just be posting, any news that comes up. But yeah, those are kind of the things, the picks that I'm looking at right now. Still waiting for some things to get cheaper. Dame, do you have any picks that you're like kind of looking at? And I'll kind of just like go through them on here just to see what I think. And I think you mentioned a couple ones, and I don't even really know which ones or what they even do. But let me see if I can find them in the chat real quick. No, I'm not going to worry about it. But yeah, also something else, I like using the MACD and I like using the RSI. So RSI is just going to tell me when we're oversold. And like right here, RSI was below 30, which is usually what I'm looking for. So we were below 30 back in, what date is this? This is back in October. And then we were oversold back in April during like liberation and like the Trump tariffs and stuff like that. But I like using this just to see when we're oversold. Right now, we're at 28, so we are technically oversold. I still think we have a long way to go. I don't think it's a bad idea to start getting into some good companies just because, I mean, some of them are presenting some discounts, especially long term if you're going to be holding like for a long time. But overall, just like, I think we still have some ways to go. So I took a lot on Margaret. Yeah, honestly, like gambling money on president's tweets, not good because he's the only person that knows when he's going to tweet. And I mean, Barron and whoever else he's talking to. But I'm not willing to kind of gamble my money on that. So I am still pretty cash. I did get into those just because I feel like they offer such a good price and I have such a long expiration on those. But I am still waiting for things to get cheaper. And then I'll probably start allocating once I see signs of a reversal and then all this stuff is kind of cleared up. Then I'll start allocating probably into some SPY leaps options. Probably run poor man cover call on it. But I mean, still, I mean, just look at this chart. Like literally, like it looks like we're just gonna free fall. Pew. Who knows? Leverage shorts. Yeah. On hype. Dude, what even is hype? I don't know what that is. Hype, because I also believe it's very overbought and will drop. Is that like something I can search up here? Nah. Is that like a crypto coin? That looks like a crypto. But yeah, I mean, right now I'm just in protective puts. Basically, if we were to free fall, I have some exposure to downs. Like, I can capitalize on some of the downside. It's not super heavy, just because I typically don't like getting into short positions on SPY. But I mean, for the time being and what's going on, and how much this actually could impact our economy, like it's just something to take note of. Something else, I want to see if I can find it. It was like, there's a lot of things that are kind of comparing what's going on right now back to 2008 and like the financial crisis. Who knows? Let's see. Okay, here we go. Like, there's some stuff right here. Like the 30-year treasury yield closed at around almost 5%, getting very close to the highest level since the run up to the GFC. So, I mean, stuff like this, pretty concerning. Obviously, private credit is an issue. A lot of people making big bets on AI might not get their money back. Yeah, it's a crypto hyperliquid, basically one of the most used cryptos for trading purposes. So yeah, I mean, honestly, there's like, I like what you're doing because I typically like shorting things that are super overbought and like overhyped stocks and stuff like that. Really, really good thing to short because, I mean, they just push up for no apparent reason. It's mostly just hype and like people just really just betting their money. So capitalizing on shorts like that, especially right now, I mean, you really can't go wrong with it. What else? I'm trying to think of anything else. Yeah, I mean, I think that's all I kind of want to cover. I went over a couple stocks. I kind of went into the news that we have this week, and then also kind of the things that I'm looking for, kind of waiting for, and what I'm personally doing. So I'll kind of end that here. But Dame, have a good weekend. Good luck at relays, and then I'll see you there. All right, peace out.